want to know the driving force behind this pretty irrepressible market, look at the industrials that refuse to bend the knee. Even when these stocks get hit with a broadside of negativity, they just don't get crushed as they used to. Consider the case of Parker-Hannifin, symbol PH. That's a classic smokestack stock that makes all sorts of industrial equipment. I know it sounds boring, but it's hydraulics, some aerospace components. Over the past week, do you know that 6 separate analysts, 6, have downgraded the stock in a row? To put that in perspective, 6 analysts downgraded Kraft Heinz in late February, but that was right after the food company that had posted a huge earnings shortfall slashed its dividend and announced an SEC investigation. 6 downgrades is a lot, especially when Parker-Hannifin actually hasn't done any here to actually deserve sell. And the response? The market couldn't care less. In fact, Parker-Hannifin is actually up $4 since the downgrade started. Buy. The first couple of notes did a little damage, but the rest of them have been ignored, which is how the stock could rally on seemingly bad news. So we got to ask ourselves, when something like this happens, I got to give you the context. What the heck's going on here, basically? Now, there are a couple of things you need to keep track of, but the main one is simple. These bearish analysts simply don't understand the current zeitgeist of the market. They know Parker-Hannifin is expected to report in a couple of weeks, and they want to bash the heck out of the stock ahead of time. Get it right. Maybe they'll even be right about the quarter, but that's not the point. See, in this environment, the current results simply aren't that important if you're an industrial. Why? Because the Fed has Parker-Hannifin's back. Jay Powell, our newly dovish Fed chief, has made it clear that he wants to cut interest rates. Lower rates bolster the economy, and a strong economy benefits cyclical companies like, well, Parker-Hannifin. Investors are willing to look through most near-term weakness as long as they're confident that the Fed will take action. That means all these analysts who downgrade the stock are fighting the Fed. They are fighting the Fed. I've told you you can't do that. And they're fighting the tape. And that's a fight you cannot win. Not unless the Fed changes course. They know nothing. Which seems unlikely to me, given that there's real weakness in the business side of the economy. Witness CSX, even as the consumer's doing just fine. Witness Bank of America. But that's not the only thing that Parker-Hannifin is going for. The industrials, we don't talk enough about them. See, in particular, they get an additional boost because there just are so few publicly traded manufacturers. We're not a manufacturing economy. We have a real shortage of this kind of stock, especially since many of these companies have monster buybacks, and we rarely get any industrial IPOs. Between the Fed and the industrial stock shortage, these analyst downgrades simply don't matter. Parker-Hannifin's like the unsinkable Molly Brown, the socialite who survived the Titanic, sort of like the Kim Kardashian of her day. We're seeing the same thing with Illinois Toolworks, by the way, which seems to catch downgrades as often as the Yankees win games. Now, does that mean you should buy these stocks? Parker-Hannifin gave you that minor dip today off $3 and change. That, remember, that's probably really off the Textron loser. It's time to pounce. All right, not so fast. Not so fast. This is more of an instructional piece. This is where the market is telling you basically you got to be selective. I would never bet against an industrial in an environment where the Fed is easing. It would be lunacy to short the stock. But you don't necessarily buy every cyclical under the sun just because the Fed is suddenly your friend. You need to look at the particulars. You know that cyclicals can go down on bad numbers even when there's a major stock shortage. CSX, one of only a handful of major railroads, reported devastating shortfall last night with management slashing their full-year forecast because of the trade war and also because of higher rates. Stock plummeted 10% today. For the week leading up to earnings, CSX, though, unsinkable. But a truly dismal quarter is enough to blow anyone out of the water. In short, if Parker-Hannifin gives us not just a ho-hum disappointment, but a horrific CSX-style disappointment, say goodbye to the unsinkable Molly Brown. Hey, by the way, in real life, Molly Brown survived the Titanic, but she only died of a brain tumor 20 years later. So how is Parker-Hannifin doing? Okay, as a textbook industrial company with a ton of overseas exposure, they get nearly half of their sales from outside the U.S. This stock has been put through the meat grinder every time investors get worried about a worldwide slowdown. When trade tensions with China flare up, well, it gets annihilated, okay? And that's what happened in October when Vice President Pence gave you his big speech framing the trade war as more like a new Cold War with communist China taking the place of Soviet Union. At the same time, the Fed got too aggressive with the trade hikes, dropping the boom on all things cyclical. But when Powell reversed course, okay, look at this. Reverse courses in January. Parker-Hannifin comes roaring back. Stocks surged higher through April, all right? But then in May, President Trump ratcheted up the trade tensions again. The stock came right back down. In late April, Parker-Hannifin was a $190 stock. Okay, look at this. By the end of May, it was a $152 stock. Since then, we've gotten a détente with China, although who knows how long that'll last. And the Federal Reserve has started making noises about the need to cut rates, possibly very soon. So the stock's been able to rebound to 167. This is what I would describe as a picture of the current zeitgeist, okay? Right there. Now, the last time Parker-Hannifin reported in April, the company delivered a substantial earnings beat, even though its sales came in a bit light. Wall Street was not thrilled, especially since management refused to raise its full-year forecast. Remember, that's a kiss of death. You raise your near-term, you beat, but they don't raise the rest. Well, that just means the rest is going to be worse. It was a solid quarter we got, but at the same time, we didn't have the Fed at our back, so the results were not well received. Which brings us to the latest round of downgrades. A week ago, this is an amazing litany. JP Morgan took Parker-Hannifin from an overweight to neutral. They like management, but want to get more cautious given that the industrial production is weakening worldwide. They also aren't thrilled about the recently announced acquisition of Lord Corporation. That's a maker of adhesives, coating, and other specialty materials, which the company's buying for $3.7 billion in cash. Okay? JP Morgan thinks they may have overpaid. That same day, Deutsche Bank published a negative call, arguing that Parker-Hannifin was likely to pull back in the near term because they expect the guidance to be disappointing when the company reports in a couple of weeks. Later that same day, Wells Fargo downgraded from outperform to market perform again. They expect a suboptimal forecast. Then last Friday, Bank of America, Merrill, hits Parker-Hannifin with another downgrade, buy to neutral, saying, quote, they see limited room for either multiple expansion or upward earnings revisions in 2019-2020. It's all about slower global growth and macroeconomic uncertainty. Then, 2 days ago, KeyBank downgraded it from overweight to sector weight. That's basically buy to hold. And then finally, well, yesterday we should have gotten what would have been the coup de grace. Goldman Sachs taking Parker-Hannifin from neutral to sell. Wow. Again, the thesis is that short cycle industrial activity is slowing. Will you look at that? And look, there's substantive reason to be worried. I'm not going to deny that. When you look at the CSX disappointment from last night, metals and equipment were down 6%. Parker-Hannifin is actually exactly the kind of machinery maker that tends to get hit when the economy slows down, although it also recovers more quickly when we recover. The interesting thing is not that the analysts are concerned. It's that the stock market, it's not blinking. It doesn't seem to care, because it's banking on a series of rate cuts that will breathe new life into Parker-Hannifin's business. I wouldn't recommend it here, but I also wouldn't recommend going against it. Don't you think some of the negatives are in the stock? Bottom line, if you want to understand why this market remains so resilient in the face of not-so-hot earnings, look at no further than Parker-Hannifin, a great American company. This enterprise keeps getting hit with legitimate downgrades, but the stock refuses to go down because Wall Street believes it's about to get a boost from the Fed, and that's actually more important than all of these negativeness. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.